Hello, this is Sal Guatieri, Senior Economist, BMO Capital Markets. Concerns about a major housing correction in Canada have ebbed, as the market has repeatedly defied naysayers by cruising along in most regions. That doesn't mean you should ignore what's happening, especially in light of growing regional differences. Here are 5 things you should know about the housing market. The first thing is that there is no Canadian housing market. Rather, there are 3 distinct markets depending on where you live. Home buyers living outside the depressed oil pumping provinces or in the heated Vancouver and Toronto markets face generally steady conditions, with sales close to long-term norms, markets that are balanced or slightly favoring buyers, and prices that are rising either modestly or little at all. In one word, bland. In most cities, be it Winnipeg, Ottawa, or Halifax, valuations are normal, with prices hovering just above 3 times family income, and affordability is healthy, with mortgage payments on typical purchases consuming less than a fifth of income. It costs only a little bit more to live in Montreal. However, in the oil-producing provinces, first-time buyers with jobs are benefiting from moderately declining prices. By contrast, potential first-time buyers are largely shut out of the detached property markets in Metro Vancouver and Toronto, spurring more to either drive to qualify or settle for a condo or apartment. The second thing to know about the housing market is that Alberta is no stranger to corrections, which follow the usual boom and bust cycle of oil markets. It has faced bigger downturns before, and it will survive the current one. While Albertans are the most indebted Canadians, low interest rates should limit increases in delinquency rates and declines in home prices. To its credit, the province entered the current slump with a lean supply of homes and with valuations only moderately elevated. As oil prices partially recover, Alberta's economy and housing market should stabilize next year. Like Alberta prior to its slump, the nation itself is not building too many homes. That's the third thing you should know. If it was, prices would be falling, not rising in most regions. In fact, at the current sales rate, listings are at 6-year lows. A very lean supply of detached homes in Vancouver and Toronto is one reason prices are rising rapidly. Condo prices have also caught a tailwind from falling inventories despite an ample supply of new units. Low rental vacancy rates in both cities suggest there is no glut of homes. It's not just the restricted supply of land that's propelling Vancouver and Toronto house prices to dizzying heights. Demand remains red hot, stoked by low borrowing costs, international migration, young millennials starting careers and families, strong job growth, and elusive foreign wealth. None of these demand drivers look set to change this year, suggesting it's clear sailing ahead for both markets. That's the fourth thing you need to know. It might not be until next year, when interest rates are expected to climb slowly, that we could see some cooling off in both these regions. The fifth and final thing to know is that too much of a good thing can turn bad. While supportive demand fundamentals and restricted supply will help to limit any correction in Vancouver and Toronto, both regions are susceptible if unemployment or interest rates rise sharply, or if the influx of foreign wealth slows. Rampant price increases could also undercut economic competitiveness. If prices continue to outrun incomes, workers will look elsewhere for more affordable living. In response, companies will be forced to raise wages faster than warranted by productivity to retain and attract highly skilled workers from other parts of Canada and the world. This could ultimately erode the cost advantage arising from a weak currency, thereby slowing growth not just in these 2 cities, but nationally, as they are home to 1 in 4 Canadians. To sum up, the dramatic regional shifts in Canada's economic landscape look set to widen further this year. It's sad news for Albertans, but good news for many in southern Ontario and BC. However, these differences could begin to narrow next year if oil prices and interest rates move higher. Thank you.